Afternoon, fellow Malaysians and expatriates currently residing in Malaysia. Thank you for joining us from wherever you are in and outside the country, and for making learning and development a priority during this trying time. I'm Charmaine Augustine from the Asia School of Business in collaboration with MIT Sloan Management, and I will be your moderator for today. We are pleased to bring you this webinar organized by our media partner, the Star Media Group, in focusing on business and management innovation in a new crisis. Indeed, we are in a crisis right now, this very minute as we speak. That's the irony. Indeed, our current situation is the new normal that all of us are trying to adapt to, as you are at this very second, to varying degrees of success. And it is even more vital when it comes to business and management imperatives required during this volatile period. Joining me this afternoon are three esteemed professors from Asia School of Business who are international faculty fellows at MIT. They will share their research, provide insights, frameworks, tools on how businesses and management need to re-engineer if they are to survive, sustain, and ultimately thrive in a time of VUCA. Each faculty will present their respective topics for between 15 to 20 minutes, and this will be followed by a Q&A session after each presentation. So if you have questions, you can start typing it in as they're speaking, and we will have to pick selectively because time is of the essence at this point, and each professor will speak, as I said, between 15 to 20 minutes, and we'll see how that goes. The three topics which will be covered in this webinar are the entrepreneurial organization, nail it, scale it, sail it, which will be presented by Loredana Padurian, Associate Dean and Faculty for Action Learning, and will zero in on the evolutionary framework of most companies, from startup right up to the point they mature and become more sophisticated entities, and the tools required to navigate every stage. The second topic we'll go into is fintech innovations, disrupt or be disrupted, which will be brought to you by Assistant Professor Teik. And Teik, who is an expert in finance, will discuss how COVID-19 has been a catalyst in digital transformation of financial services, with fintech innovations at the forefront, and how industry leaders have to transform themselves as well if they are to lead in this radical digital era. Finally, our third topic today by Professor Ambra is Unleashing Family Firms' Innovation Potential. Ambra Mazzelli, Assistant Professor of Management and Organizations, will provide insights and learnings of how tradition has helped family businesses cope with COVID-19. Ambra will provide practical examples and evidence of methods in which family business leaders look back for guidance and knowledge from the past in order to marshal economic pitfalls while preparing for the future. All right, so that sums up the three topics that we're going to talk about today. And let's just dive into our first topic for the day. But just before that, let me give you an introduction to Professor Loredana. The first topic, the entrepreneurial organization, nail it, scale it, sail it. Professor Loredana is a global entrepreneurial academic with a track record of program, school, and intellectual leadership for multiple degree programs and business units. She has been an international keynote speaker at various global platforms in the US, Asia Pacific, and Europe. Her most recent research, Jungle, Mountain, Ocean, A Startup Journey, focuses on understanding the evolution of startups to scale-ups to sail-ups. Professor Loredana holds a master's in communication and economics and a PhD in management from USI, Switzerland. So let's dive into our first session with Loredana. Over to you, Loredana.
I hope you can hear me now. Welcome to my living room, first of all. I want to say I never thought I'm going to have so many people in my living room in my entire life, but it turns out there's room for 1,000 of us. So welcome, welcome. I want to take you on a journey today, and I want to take you on a journey that I'm going to sprinkle with a little bit of stories and a little bit of a narrative. And I want to talk about the entrepreneurship, but I don't want to talk about entrepreneurship just from the perspective of running a startup, but I actually want to talk about entrepreneurship from the perspective of, if you want, a tool for a survival organization. So for the past 8 years now, together with the president of ASB, MIT Professor Charles Fine, we've been working on trying to map the journey of how companies evolve. How do they, like Charmaine said in the introduction, how do they grow from being an early stage startup? And I don't mean necessarily small companies. Think about the early days of Google or the early days of Facebook or Tesla, for example. How do they evolve to become scaling companies, and then later on mature companies such as Bank Negara, for example, or Volvo, or what else we have in the room. So, like I said, I'm going to take you on this journey together. But before I do that, I am very grateful that the Star invited us to be part of this conversation with you. Asia School of Business is an MIT startup. It was established in 2015 in collaboration with MIT Sloan and Central Bank of Negara. And our mission was to build a business school, a global business school that will build and attract transformative and principled leaders. I'm not going to dwell a lot on what ASB does, but I'm very proud to tell you that in our very early days, we already received 2 innovation nominations, 2 innovation accolades, one by Poets and Quants, was considered to be the most prominent MBA platform in the world. And then in 2019, we won the award for the Early Stage Innovator Award. So while we are a very young company, while we are a very early stage startup, we are having a lot of drive and a lot of innovation intent and success. And this is some of the things that I want to talk to you today. For the past 2 months, as you can imagine, I've been asked several times to reflect on what does it take to survive and come out of this crisis. And to be very honest, please do not expect that I'm going to give you all the answers. The reality is we've never seen anything like this before. None of us really know what we need to do. But based on all the conversations that I had with leaders from pretty much all over the world, I've been running webinars in 3 continents for the past 2 months. We keep hearing the same keywords that are driving these answers to the questions, how are we going to make it out of this? And in this short webinar, which by the way, it's only a preview of a program that we are going to launch with the Stars starting this summer and later on in the fall. So it's just a preview of a program that we usually run at ASB and MIT, and it's anywhere between 3 and 5 days. So bear with me, in 50 minutes, I'm gonna try to give you a 5-day content. So in my research, and I actually used my first picture is a picture that I took in Borneo. So in my research, what I learned is that the journey, the evolutionary journey that companies take from becoming these early stage startups to very later on mature companies is a journey similar to first going through the jungle with very little tools, maybe nothing but a machete. Once you start growing, the journey feels a little bit like hiking up a mountain. And then once you became a mature, more sophisticated company, it feels a little bit like sailing through the ocean. So I'm going to take you on each stage, and I'm going to talk a little bit about it in this mini preview. So the first stage, and think about the first time you try to do something from scratch, the first time you try to do something from the beginning. Either you started a new project, you were part of a new company, maybe you even tried to cook something for the first time, right? You don't really know everything. You don't really have a clear path. You don't really have a clear recipe. The experience is an experience that feels very much like going through the jungle with nothing but a machete. And obviously, when I talk to my fellow Malaysians, we understand what it takes to go through the jungle. And I say we understand now, because for the sake of this research, I went through a couple of jungles myself. And if you remember this experience, and it's an experience that it's intimidating, it's an experience that is very intense, is very uncomfortable. There's a lot of dangers around you. You can't really see very far. So in the jungle, you actually don't really see the horizon ahead of you. So in terms of business, when we take this analogy and we bring it to business terms, we think that your main goal is to figure things out. Just do it fast and do it quickly. And by the way, one of the things that I have learned from my experience in the Malaysian jungles is you have to carry as little as possible, but choose that little with care. And this is an advice that we also give to our to the companies that I work with, to the startups that I work with, because we always say, in order to survive this early stage step, you need to carry as little as possible and move fast. So it's a journey of speed and frugality. One of the things that I also learned in my research is that it takes also a different type of people. The typology of people who get excited about the nailing stage, who get excited about the jungle, is a typology of rule breakers. It's also a typology of people who are very, very hands-on, a type of people who do not need a clear hierarchy, who can function really well without very clear roles, and people who, when they see a problem, they own a problem. And in general, this type of people tend to have a more generalist perspective. Like, for example, I could be a professor of entrepreneurship, but when we first started ASB, and I was one of the first hires, I had to learn how to do marketing, I had to learn how to do HR, I had to learn how to do operations. And obviously, I'm not going to be very good at that for very long, but good enough to get us out of the jungle. So another thing that that we have tried to do in this research, and again, let me remind you, I'm giving you in 15 minutes a 5-day content, but we try to define this environment and see what type of environment attracts what type of people, like I said in the previous slide. And in a nutshell, so if you want to remember something from this early stage, this is the slide that you want to take away with you, is that it's in an environment that is defined by speed and agility. So you have to move really fast. You have to be very uncomfortable with uncertainty. You have to be very good at solving problems for the first time. So problems you've never seen necessarily before, or at least not in that environment. It's an environment of people dependency, intense validation, and then the type of people that you need, like I said, are very hands-on. They are hackers, they are mission-driven, they see a problem, they own a problem. Now, for those companies or those projects who manage to survive successfully the jungle journey, the next step in the process, the next step in this journey is a journey of scaling. And when I started doing research, and by the way, we have investigated over 20 companies from all over the world, anywhere from Asia to South America, Europe, and US, what we have learned is that once you leave the jungle, so once you figure things out, you start a journey of scaling, and it's a journey that feels similar to hiking up a mountain. Like, this is me in Switzerland. I used to live in Switzerland for a while before I moved to US and then later on to Malaysia. And what I learned is that the experience of hiking feels very different than the experience of going through the jungle. If in the jungle speed is fundamentally important, once you start hiking up a mountain, it turns out that endurance is more important. You can't hike too fast. You can't run up the mountain, because obviously you're going to run out of energy. You're going to run out of resources. You're going to run out of capacity. So scaling, now put into a business context, comes at the point where the company now has some value proposition that it's tested. You have customers, you have a production, you start to generate revenue. But one thing that we learned from one of my colleagues from MIT, he says, the same behavior that made you successful in a startup mode, so in the jungle mode, will be a behavior that will actually affect you negatively in the jungle. And we also say that in this case, ideas are rewarded, but execution is worshipped. Another thing that I learned in my research is going back to the people component. that the leadership, the organization, and the team that is required to successfully scale the company, to successfully go through the mountain, is an experience that is a type of people that is driven now by a different set of values. They care a lot more about persistency and consistency. They're excited about setting up processes for the first time. They tend to be more systematic. They tend to be more consistent in what they do. So both the leadership, the organization, and the team has to adjust to this new journey through the mountain. And in a nutshell, like I said, we define this scaling journey. So the second stage in the evolutionary journey, we define it as a journey of growth and a journey of endurance. So if the jungle took us through speed and frugality, at this point, we have to start to be more automated. We start to see a lot more processes. We start to see segmentation. If in the beginning you only had one type of client, now you're going to have 2, 3, or 4. But we also see the beginning of bureaucracy, because we have to create committees, we have to create more SOPs, we have to create more KPIs, right? So the people that are required for this environment are also, they tend to be slightly more typical for this. And for those companies who survive the scaling journey, and by the way, the reality is that most companies die here. They die either in the transition between the jungle and the mountain, or they die on the mountain because they run out of resources. But for those who survive, now we're going to take you on a sailing journey. So think of a sailing company, a company, like I said, like Bank Negara, Maybank, CIMB, Volvo, Toyota, for example, right? So these are companies that are tested through time. They have now what we call a very sophisticated system, right? And in a way, they are similar to these very large tank ships that you see in the ocean, who can hold their course, even in heavy weather, if they are properly equipped and manned up. But the reality is that this, again, requires a very different kind of leadership and a different kind of people and culture. So if you're the leader of a company like General Motors, for example, Mary Barra, who's the CEO, your goal is going to be very different than the goal of Elon Musk when he first started the company, right? Therefore, the type of people that you need in this stage have to be more disciplined, more focus-centric, more process-centric, etc., right? Because why? You're such a wide system, you're such a complex system, that if you try to rock the boat and move too fast, either to the left or to the right, or change direction, you might actually create a tsunami wave, right? That doesn't affect just you, but affects a lot of other companies as well. Think, for example, when Toyota, when GM, since we were talking about GM, when GM was going through problems, or when Uber had problems, or when, Nokia, for example, was going through a crisis. So before I wrap it up, obviously there's again the profiling of the sailing environment and people. So like I said, it's an environment that is it's an environment where most of the companies today, probably in this room, that are more sophisticated and mature, they find themselves, right? Complex, structured, discipline, focus on metrics. The type of people required, they tend to be much more stable, and they require a broader sense of understanding the complexities of the system. Now, what do we do with this framework in this environment, right? So we talked about the jungle, we talked about the mountain, and we talked about the oceans, and the tools and type of people required to survive this. So what do we do with this? What do we need in a crisis? So it turns out that you have to focus on 3 things. Obviously, you have to focus on 1,000 things, but let me talk only about these 3. You have to focus on strategy, leadership, and people. So in terms of strategy, again, these are the things that I've been finding out for the past almost 3 months now, talking to a lot of leaders across the world, is you need to go back to a jungle mentality. Your strategy, your corporate strategy, has to embrace a lot more the entrepreneurial strategy. You need to find the energy, the attitude, the people that made you successful back in the jungle, but obviously now that you're a scaling or a sailing environment or company, you sort of lost that in the process. In terms of leadership, I thought a lot about this. Do I need a leader that is a jungle leader and is going to break the rules and move fast and be very frugal? Or do I need a stable leader like the sailing leader who knows how to rock the boat, or who knows how to hold the boat without rocking it? The reality is that you need a team of all three. You need a team formed by a sailor, for example, or multiple sailors who know where do we have to go, right? But who at the same time, they recognize the need to have a bunch of nailers and scalers through the process that can break rules, they can create new businesses, they come up with new ideas. So you need to balance this. And almost in conclusion, the type of people that you need, it's a combination of these three. What do I mean by this? What I have found out successful, and we've done this at ASB a couple of times, is that you need a profile, not a profile, you need a type of teams, we call them task forces at ASB, that are a combination of nailers, scalers, and sailors. Because you need to jump out of the airplane, which nailers do very successfully. You need to build your parachute as you're coming down, and also have a plan for landing and then later on. An almost final point, and then I'm going to move to my final slide, is you have to realize that everything that made you stable, functional, and successful in a normal time will require now a revision. So standard rigid policies might be loosened up to provide flexibility, because now you have to renail a lot of things. Bureaucracy is out. And by the way, bureaucracy was never in. And I'm going to wrap it up here, and I'm going to tell you that what I think, and again, this is usually a 5-day experience that I run, and I invite you to come to our class. During a crisis, we need to go back to a jungle mentality. Move fast, be frugal. Because in a crisis, to be honest, we are all startups. You need a team of nailers to fix this problem quickly. You need to be supported by scalers and sailors. And finally, let me end up with this. Don't waste a good crisis. There's so many things that you can do because of a crisis, thanks to a crisis, or during a crisis. Things that you couldn't do, didn't have time to do, you should have done, like invest in digitalization, offer new products, fire the low performers, etc. So I want to leave you with a positive message. I want to leave you with an inspiration to go back to the jungle mentality. I want to thank you. This is my phone number, and this is my email address. Please feel free to send me any comments that you have. And I want to wish everybody a smooth journey from the jungles to the mountains to the oceans of business success. Thank you very much. Charmaine, back to you.
Thank you, Loredana. That was an inspiring presentation. That's a little bit of a preview, ladies and gentlemen. What you saw today is actually a much expanded program that runs an entire day. And as Loredana was saying, perhaps at some point you'd care to join us for that. Let's take a couple of questions that came in just now.
Okay.
One person asked, how do you make people own a problem when they see it? Because many people see a problem, but nobody wants to own it. Nobody wants to take it up and solve it.
That's such a good question. I don't know who asked that question, but you're going to get 5 extra points if you come to my class for such a good question. So in our research, we actually found out that there's 5 different types of people that fit this narrative. There are the nailers, the scalers, and the sailors. And in between, there are the profile of people that we call transitional. They are the organizers and stabilizers. Now, nailers tend to see a problem, they jump on it, and they own the problem. But the reality is that you cannot continue on that path for a very long time, because once the company is big, if everybody jumps on the problem without really thinking who owns it, what's the process for that, you create a lot of chaos. So it depends a little bit on what type of environment you are in. So if you're in the jungle, the mountains, or the oceans. But what I would say today is, if you see a problem, speak up. Speak up and say, I see that we have this problem. We need to do something about it. I want to lead this initiative. I'd like to be part of the task force. The reason why people don't do it is, if many of us have part of a safe environment, there's very clear rules about who does what, then you tend to be waiting for somebody to tell you what to do. So my final point to this very good question is, if somebody in this room today, in my living room, 1,000 people here, you're part of a leadership team, go and encourage your people to see a problem and own the problem. Talk about it, bring it up. Do not punish. A lot of people are afraid of owning problems because they are afraid of being punished, right? Because if they see a problem, there's an assumption that it's because of you, right? So encourage people to see problems, own problems, encourage conversation. Charmaine, we cannot hear you if you're speaking.
The second question here is regarding the third stage of evolution. When you reach sail it, you mentioned just now that you might become such a huge, efficient, and successful ship that it might be difficult to navigate. So the question that came in was exactly that. Like, this is a time of a pandemic, and business has, stopped, and in some places collapsed for many companies. How does an organization make that 180-degree turn that they need to? And what's the first thing that they should start doing in terms of dismantling?
Yeah. So I also see that Richard said, I'm talking about startup. The key issues right now is pandemic. Actually, well, I'm not talking about startups. I'm talking about an entrepreneurial mindset, right? And I think this is, Charmaine, a little bit the answer to this question. The reality is that a lot of very successful sailing companies, they still have an entrepreneurial mindset. And the way I've seen it happening, imagine this if you want a visual for this, imagine that you have a big tank ship. And with this tank ship, you have a lot of jungle environments, right? So these are companies that are constantly nurturing innovation, disruption to happen. And these are companies that encourage people to think in nailing terms, right? If by the time the crisis hit you, it found you lost at sea, in the sense that you're big, but you don't know where you're going. You're so bureaucratic that nobody knows who owns a problem or who owns a process. Let me say that again. Yes, Churchill said that, never waste a good crisis. Don't waste this crisis. Look back at, I was working with a bank recently, and I asked them, what's your youngest process? They are very bureaucratic and they know they're bureaucratic. It turns out their youngest process is 18 years old. You could take that process and go to a restaurant. It's that old, right? So this is really a good time about, it's a good time to go back and say, all right, this works, this doesn't work. Let's get rid of it. People tend to react differently. They either react faster, they don't ask that many questions, they understand that you need to move on. So again, if you're a sailing company, try to see what jungle type of environments and people you have there, bring them out, foster and encourage this questioning, and then fast problem solving. So many good questions that I see on the chat.
Okay, and there's one that talks about startup and growth, etc. And this person wants to focus on the pandemic environment. I think what he intends to say is that, well, right now it's a jungle out there, but everything is outside of our control. And no matter what we do, even if we go back to basics, there's nothing much we can do, because demand and supply is out of our hands due to the pandemic and due to MCO and due to restrictions on business. So no matter what you do, you can't really get out of this.
I disagree with that 1,000%. I think that companies who think like that I don't have any control, that I cannot do anything about it, these are the companies who are going to get lost at sea. I think, and this is going to be my final point for today, I think a crisis accelerates disruption, either in a positive or in a negative sense. What do I mean by that? You can get hit by a crisis and then get lost at sea because you don't have enough agility and flexibility to move. Or you could get hit by a crisis and react in a way that you probably wanted to do, but you were not really painfully pushed enough to do it, right? So for example, imagine if the Star was to run this 2 months ago online. How many of us would have shown up? Very few, right? Why? When my behavior, my topical behavior, my typical behavior is to go and meet in person, right? Think about how many restaurants are either dying or pivoting in new delivery business models. Think how many companies, for example, I got a lot of calls from the automotive industry. I work with companies in the automotive industries who are saying, we realize that we have the technical abilities and the manufacturing components to pivot really quickly into medical, not medical devices, but medical technologies and support. We're gonna do that, right? So it's true. A crisis is gonna hit you. It's gonna disrupt you, but disruption can be both positive and negative. And I think it depends how much of that nailing mentality, that jungle mentality you have to react in either positive or negative way. And yes, I think you can have the presentation afterwards. Thank you, Andy.
Thank you, Loredana. And let's move on now to the second topic. And this will be run by Assistant Professor Lee Teik on FinTech innovations, disrupt or be disrupted. So a little bit about Teik right now. Teik's areas of research are corporate finance, corporate innovation, and financial innovation. He has previously lectured with Curtin Singapore and was Assistant Professor of Finance at Shanghai University of Finance and Economics and a visiting scholar at both New York University, Stern School of Business, and Cambridge Judge Business School. His works have been featured on the Economist blog, the Columbia Law School Blue Sky blog, and BBC World Service, and published in the Journal of Corporate Finance and Journal of Fixed Income. Teik received his PhD in Business Finance from Singapore Management University. Please welcome Professor Teik.
Hey, good afternoon. Thanks for spending your precious time with me. Today we're going to talk about FinTech innovation, the impact of FinTech innovations on financial services sector. Specifically, how do the players are going to disrupt or get disrupted unless they adapt. This is the roadmap for today's webinar. First, we are going to talk about the economics, what the sector is really about, what financial services provide. And then we are going to move on to talk about FinTech innovations' impact on the economics of scale, or these economies of scale. Then I'm going to put everything in the context of COVID-19 and talk about some of the technologies, the Lego blocks that enable FinTech innovations. Lastly, we are going to talk about the impact of FinTech innovations, specifically some of the new business models that evolve in the digital age. Now, the economy. If you think about financial services, they are really an industry of middlemen. They produce no physical asset, but they are advisors and intermediaries for the market participants through an exchange of information or an exchange of capital. Now, COVID-19 is wreaking havoc on both the external and internal activities of how banking is conducted. Imagine, let's say you want to exchange for some US dollars today. Would you drive to a bank branch or money changer to get it done, even if it is an essential service? You have to queue and you have to meet people. So if you do not believe in FinTech, you got to take the leap of faith to basically transact through your mobile. And this creates both opportunities and shocks to the players in the industry. Now, FinTech players are going to play an even more important role in this ecosystem. And broadly speaking, there are two types, the disruptors and the enablers. And we are going to discuss about them in the next few slides. Now, the impact of FinTech innovations on the economies of scale, or these economies of scale. Two key takeaways. Number one, the digital age is going to see two trends. Trend number one, companies are faster to scale. Trend number two, companies are also faster to reach these economies of scale. Let's look at this graph in details. The y-axis is the average cost, and the x-axis is basically your output. Minimum efficient scale, you can think of it as the critical mass to sustain the business. Now, thanks to AI, big data, blockchain, and cloud computing, IT costs for financial services has been brought down to the level where it is within reach of many players, especially the fintech startups that serve a specific niche, offering a very unique product or services. Now, thanks to this, the mode of production has changed. Traditionally, the incumbents, the like of the universal banks that you know of, Maybank, Wells Fargo, and so on and so forth. What they do is basically to mass produce standardized product at scale. However, in this digital age, you are going to see mass customizations at scale, thanks to the lower barrier to entry. And again, this creates a lot of opportunities as well as risks. Now, let's look at the drivers for fintech innovations as well as their adoptions. COVID-19. In 2019, this is how a zoo looks like. But right now, it's exactly the opposite. Until today, there are still about 2 billion people who are placed under one form of lockdown or others. And that's about 1/3 of the world population. COVID-19 is ushering in a new age, an age where banking transactions are done humanless, cashless, and paperless. So as I mentioned before, it creates opportunities and risks. The question is, how? Now, remember, I talked about fintech enablers. These are going to benefit a lot. Why? Because if you talk about who are going to thrive, they are going to be the digital native in the sector, and also the incumbents who have already embraced digitalization. But the others are facing a crude awakening. And you can see many of them are scrambling to innovate their technology. And this is in part made possible by the fintech enablers. Now, this is a plot of the time span on finance app over time. To queue with others and to embrace fintech or embrace mobile transactions. Look at this. We have 4 months of data of time spent on finance apps. December last year, January, February, and March this year. Let's take Japan, for example. The time span has increased about 55% relative to December last year. So this validates the idea that the financial services sector is undergoing an earthquake. Now, we have been talking about technology. What are some of those technology that makes fintech innovations possible? What powers those mobile apps, for example? The first component of the enabling technology is really artificial intelligence. The second, blockchain technology. The third, cloud services. And the last, big data. Together, we have fintech innovations. And they are really new models or even products in the sector. Now, let me give you an example using WeBank to illustrate the impact of each of these components on its bottom line. Let's talk about artificial intelligence. WeBank users' mobile phone to do onboarding. Now, in times like this, would you really want to go to a branch to apply for a new insurance or a new loan? Possible you want to avoid that altogether. This is what WeBank is doing. What you need to do is the following. You take a short video of your face and you take a snapshot of your national ID, and then the facial recognition technology powered by AI is going to basically authenticate that you are who you are. On top of that, if you have any technical issues that you want to deal with, instead of calling the operations, and it is in the ass nowadays, you wait ages for someone to return your call. The chatbot, which is AI and powered, will talk to you. And over 60% of the time, there's no need for manual intervention by a human. That's AI. It makes the operations for WeBank more efficient. Let's move on to blockchain. Before blockchain, WeBank takes about 2 to 3 working days to reconcile their books with that of departments. However, after blockchain, the reconciliation of the books is done real time. Now, what is blockchain? Blockchain is a single source of truth. Now, before blockchain, what happens is that you have your own database, I have mine. When your transaction doesn't reconcile with mine, and we have 2 versions of truth, we have to sit down and try to figure out what is going on. We have to reconcile. But thanks to blockchain, this is totally eliminated. Now, let's move on to cloud computing. If you look at the incumbent banks in China, it takes them about 20 to 100 renminbi to maintain one account 1 year. But WeBank takes only 3.6 renminbi to do the same. You see the substantial decline in operational costs. And cloud is highly scalable. There's no need to buy another mainframe as you scale up. Big data. Big data in combination with artificial intelligence and cloud computing enables automatic and often better decisions. For example, if you want a loan, in the past, you walk to a bank, take the paper, fill out the form, submit, and then you wait for a couple of days for an answer. But WeBank pre-approve your loan. It really depends on whether you want to take it. But they have 100,000 parameters to profile you to make a decision, a call as to whether you're likely to repay or not. And their loan loss rate is much better than the peers. Now, let me just show you one quick example. Cross-border payment. This is what is usually done. You have the buyer and the seller, and you have a bunch of intermediary in the middle. And sometimes when transactions fall through, that's thanks to disagreement over the reconciling elements. Now, thanks to blockchain, the whole process has been simplified into this. You save costs because you go through less intermediaries, and there is faster dispute resolution, if any. Let's talk about the impact. Now, financial innovations are changing financial services sector. If you were to look at this plot, the y-axis is basically the number of products and services that a company provides. And the x-axis is basically the breadth of demography. Now, Prof. Dana mentioned about startups. They are very much the unbundlers. These are startups that look at the product and services that is being offered by the incumbent, the universal bank, and ask, can they do better? For example, can they do better SME lending? And then what they do is basically to truly understand the process and to enhance the customer experience. to become the best of breed in a particular niche. Now, some of them become successful. They nail it, so they scale. They become rebundlers. Now, TransferWise is one good example. TransferWise started off as just FX transfer company, where you do foreign exchange. They did it very well, and now they are evolving, adding on to their core FX transfer. There are two key components now, the debit card as well as accounts in foreign currencies. But it remains the case that they are serving the same good old niche. Some of the rebundlers, they become part of ecosystems player. One good example will be Starling Bank. Starling Bank in itself, at its core, is just a company that has business and retail account. However, right now, it has turned into a marketplace where all the best of breed of different areas, wealth management, FX transfer, and so on and so forth, they invite the best of breed in each area to be part of an ecosystem. And one thing nice is this. Starling Bank would have a 360 view of their customers. And this allows them to mass customize at scale, which is pretty much impossible with the old technology. Now, some ecosystems evolve further. They turn into holding companies. Instead of inviting best of breed of other companies, holding company own the entire ecosystem with different subsidiaries serving different line of business. And financial is one example in which it started off with Alipay, the payment, and slowly evolved into different subsidiaries and eventually own the entire ecosystem. A nice thing happens when you have an ecosystem like this, mass customization at scale. Now, there's one weird player out there. If you talk about the unbundlers, they begin unscaled. But for platforms, they begin scaled. So some of these players will be Wirecard and Alipay. They focus on transaction processing. They are pretty much the fintech enablers, allowing companies, especially the incumbents, to leverage on their technology to do things that they would not have, possible for them to do it themselves. And this is actually the group of people that are going to benefit a lot out of this crisis during and after. Because as I mentioned before, a lot of the incumbent players are scrambling to renovate their technology. Now, I want to zoom into this particular quadrant. These are players, and some of you would think that these players are like the universal bank, where they serve a lot of people offering a lot of products and services. But not quite, because they are built upon strong digital foundation. And unlike the old players where they mass produce at scale standardized products, these companies, thanks to their digital foundation, they mass customize at scale. And one side effect of that is that they enjoy network effects. In other words, they can scale exponentially. Think of the like of Amazon. Now, let me show you some examples of unbundlers. This is the landing page a couple of years ago of Wells Fargo's. Wells Fargo's is a universal bank providing an assorted bunch of services and products. And what you can see here is that every single button on the page, which represents product or service, is being attacked by a bunch of fintech startups or unbundlers. And this is the idea of unbundling. The unbundlers is trying to unbundle universal bank and become the best of breed. Of course, not all of them are successful. As I mentioned, I haven't mentioned about this. COVID-19 is going to have differential impact on the different players here. I mentioned that the platforms are going to enjoy, but not so for all the fintech players. For example, the wealth tech players may suffer because of a decline in AUM. The unbundlers may suffer too because of the challenges in getting funding. And all of them may also, to some extent, be affected by possible changes in the regulatory landscape. that may happen. Now, this is basically a holding company model and financial. We started off with Alipay. Now, if you were to look at this ecosystem, if Amazon is a model of successful reinvention of conglomerate, and financial is an example of successful model of reinvention of the traditional universal bank. Now, I'm going to end it here with a key message. I know that a lot of players in the sector are scrambling to renovate their technology. But there's one thing that you have to keep in mind. As you don't renovate your technology for the sake of technology, you really need to rethink how do you align or adjust your business model to fully tap into the technologies that are available. Thank you.
Thank you, Teik, for that presentation. Very interesting, very complex, lots of charts. I've got a question for you, a couple of questions actually. You talk about how companies need to re-engineer, if you like, or to adjust their business model to take advantage of the fintech capabilities that there are. But that's on the assumption that the technological capabilities in fintech are as good in many countries as you just demonstrated in those complex charts. Now, what happens if that is not the case in a country like India, rural India, for example? Let's not talk about urban areas. Or in China, how do people get on and ride on such fintech capabilities when, for example, to start with, some don't even have bank accounts, let alone can imagine what a world, a virtual world of fintech would look and sound and feel and experience, right? So what happens and how does this play out in countries like that?
So let me correct one potential misconception. China is really number one in fintech. If you talk about fintech adoption or technology adoption, China is number one in the world, better than the US. And Financial is one example of a fintech company that is coming out of China. Now, how do you embrace fintech? This is really a challenge. For example, let's say you're running a bank and you do not have the capability nor the talent to digitize your processes. What can you do? Typically, one misconception that people have is that, oh, they have data silos. The first thing they need to do is basically to combine those data silos into a data lake so that they can do processing on it and perhaps change the core banking system and bring it to the cloud. But this is going to take a lot of time. Let me just give you an example. DBS started off as an incumbent. It is still an incumbent bank, but they embraced digitization a couple of years ago. And one of their initiatives would be DigiBank in India. And it was so successful. Now, a traditional bank with branches typically take about 10 years to break even. DigiBank took about 5 years. And Financial, which is housed under and Financial, my bank took only about 1 year to break even. But the idea here is the following. DBS has engaged in this digital transformation for many years. But until today, only about 90% of their processes are, digitized. It takes a long time. And there's really no need for you to create data lake to put all the data silos together. What you need to do is just to create use case and then get outsiders to basically create the middleware or technology to talk to different databases and to interface with the customers. So take baby steps. And once you have enough good cases, use cases, you can slowly move towards the ideal setup. Back to you, Charmaine.
Yes, what are some of the new technologies that may rise out of this crisis?
So I think the technologies are already there. What this crisis does is really to basically create the urgency to adopt them. Remember, everybody still has banking needs, even though they are being locked up. So you need an alternative. And that's the reason why you see an increase in the time spent on finance app, because they are taking the leap of faith to take on fintech solutions. So in my opinion, in terms of technology, it's going to be the same old. There are going to be some incremental changes. For example, blockchain that are scalable. But the key change that COVID-19 brings is really a crude awakening that digitization is essential. The ROI is, is way higher than what was taught before.
Right, so there you have it. Yes, thank you for that answer. I'm tempted to ask you one more, but I don't think we have enough time for that because we still have Ambra to get through. So let's just carry on to the last topic, I guess. Thank you, Teik. Thank you very much for that presentation. And so we have Unleashing Family Firms Innovation Potential by Ambra Mazzelli. And here we go. Ambra's body of work focuses on research, which examines the dynamics of organizational responses to unmet goals and the implications for organizational change. And it focuses primarily on family firms. Her work has recently appeared in the Academy of Management Review, the most influential management journal worldwide. Ambra received a PhD from Lancaster University Management School, and prior to starting her PhD, she worked as an independent family business consultant in Italy. Her family owns and runs a business in Italy as well. So please welcome Ambra.
Thank you, Charmin, for your nice introduction, and good afternoon to everyone. So today's session and the short class is intended to inform the responses that family firms, constituents, and in general family members, board directors, executives, and managers can undertake in response to the current COVID-19 crisis, but at the same time to tackle new opportunities and needs emerging from the current crisis situation. Let me provide you with an overview of what I'll cover today in the next 15 minutes. I'll provide a short COVID backgrounder presenting the main challenges that family businesses can face as a result of the current crisis situation. I'll then move on describing how family tradition and knowledge from the past can be used as a tool to manage the current crisis situation. And finally, how this knowledge can be integrated in a comprehensive and thoughtful crisis response plan that family business can use. So, regarding the COVID backgrounder, we see that estimates regarding the socioeconomic impact of COVID-19 vary considerably, but the trend is clearly negative. Negative both from an operational and economic perspective, because we see that the fall that the COVID will bring about in terms of aggregate demand and supply will somehow result in supply chain disruptions, in loss of productivity, and especially in factories not being able to go back to the full capacity, and also in liquidity and cash issues. On the other hand, current crisis will probably also result in some social and emotional challenges. Many people will lose their jobs, and there will be important losses in terms of income as well. And social distances will provoke stress, fear, anxiety, and somehow a lack of motivation in the workplace. There will be also, and we will assist, a reshaping of the social contracts between actors and especially employees and institutions, and the roles that these two parties play in the current environment. However, at the same time, on a more positive perspective, we observe that current crisis hasn't impacted all the countries uniformly. We see that some countries, for instance, Hong Kong and Taiwan, but also other Southeast Asian countries, has been impacted less severely by the current COVID crisis. Why? What we have observed somehow is that following SARS in 2003, countries like Taiwan have been able to establish a central command center for epidemics at the government level, creating 124 action items, including the control of the borders, school and work policies, public communication plans, resource assessment, the creation of emergency resources for hospitals. In sum, we see that all the countries that somehow were hit by SARS in 2003 learned from it and somehow were better equipped to respond to the current pandemic. The key takeaway here is that past experience seems somehow to be valuable and a valuable source of information to deal with crisis situations. But why only Southeast Asian countries have somehow reacted to the pandemic in such a way? We have observed viral epidemics over and throughout our entire history. So think about the Ebola virus in 1966, or the HIV in 1981, the avian flu first in 1997, and then back again in 2013. Yet we observed that some governments, but also some business owners and companies haven't really been able to react and somehow take what they have learned in the past and apply it to the current situation or the current crisis situation. And this is due to something that in research we refer to as recency bias. Recency bias are biases that all humans have. And these somehow imply humans focusing more on events that have occurred in the recent present and have a tendency somehow to forget what have occurred in the past. We forget about the past and we just focus on significant recent events. However, this might not be true for family firms, and especially for long-lived family firms. The main idea here is that long-surviving family firms are potentially better equipped to both reactively and proactively respond to crisis events. And this is because they benefit from a privileged access to knowledge that has been accumulated across generations. When multiple generations are involved in the business and in decision-making, these generations have somehow witnessed similar crisis events in the past. And so lessons learned can be applied to tackle current needs and emerging needs from the current crisis situation. On the other hand, another advantage derives from the fact that the unique ownership structure of family businesses gives them a long-term orientation that non-family firms often lack. And this may allow them not only to respond to the crisis, but also to proactively thinking about opportunities or needs that can ensue from the current crisis situation. In fact, research indicates that during economic crisis and economic slumps, family firms far outshine their peers. If you observe the figure that I've here on the left in this slide, you observe that during the financial crisis, the 2009 and 2008 crisis, the average return on equity of family businesses were much higher than the average returns in their non-family counterparts. But how can this be done? So how can family tradition, which is basically the knowledge from the past encoded into the family values, into the family identity, into the family artifacts and narratives, be used to cope with the crisis situation? The idea is knowledge recombination is key. So we can use knowledge from the past and recombine this knowledge somehow to tackle current crisis. The first step, if you want to react to a crisis, should be asking yourself, how did prior generation react to similar events? Which resources did they leverage? And how can past knowledge somehow and the capabilities that have developed in the past be useful in the current situation? Are these capabilities applicable? Is this knowledge applicable to the current crisis situation? And this is the way somehow to start thinking about how knowledge from the past can be recombined to react to the crisis. On the other hand, we have also a proactive side. The proactive side means thinking long-term, means thinking and exploring some potential opportunities that can basically arise from the current crisis. And this means asking yourself, how can past knowledge and tradition be somehow recombined to tackle future opportunities? But to make this more tangible, I want to provide you with two examples of two companies, one Italian company, Aboca, and one Indian company, the Tata Group, that have somehow used knowledge from the past in crisis situation. Let me start from Tata. So Tata was established, is a very large family conglomerate, was established in 1866, and they are famous. They are pretty diversified now, but they started in the manufacturing sector. And just to test their processes, their manufacturing processes, they develop deep simulations technique. And when they basically diversify and starting having plants around India, then they also developed this digital training platform from their employees that then they decided to sell also to external businesses and governments. But then at a certain point, around 2008, a crisis emerged in India. And this was basically related to ineffective schooling, especially in rural Indian areas, and a lack of training opportunities for teachers. So what Tata thought was to use this, the knowledge accumulated and the knowledge related to the digital training and deep simulation solutions and create Tata Class Edge platform from Inspiring Schooling. This was basically a platform and the objective was to improve teaching and learning experiences through technology and through the knowledge that the Tata Group had accumulated through their digital training platforms, reactively and proactively also to promote a new learning, but also teaching delivery methods based on technology. So somehow disrupting the education sector and promoting e-learning and e-teaching solutions. And this is somehow exemplify how an initial crisis can be used proactively to really disrupt and change an entire sector or industry. On the other hand, from Italy, we have Aboca. So Aboca was established more recently in 1978, and originally the core business was based on producing beauty products through or embedding the properties of ancient medicinal herbs and biotech together. But at a certain point in Italy, there was public condemnation of synthetic drugs and especially the side effects of these drugs. And so using the knowledge and the catalog of all these ancient medicinal herbs that Aboca had accumulated over the years, they decided to move their core business and to shift to therapeutic solutions based on natural molecular complexes that could reduce somehow the drug or the traditional synthetic drug side effects. At the same time, we observed that the revenues have increased about 200% over the 4 years, and they've been pretty successful in disrupting the healthcare industry in Italy by introducing a new method of treatment that is only based on natural medicinal herbs. These are just 2 examples, but there are many more examples that I could provide, and I hope I'll have an opportunity to provide during the class on June 24th. Regarding the last part, so using past knowledge and rearranging and recombining past knowledge by itself is not enough. it needs to be integrated into a well-thought and comprehensive crisis response plan. Crisis response plans, in addition to using this knowledge from the past, also means reorganizing the organization in a way in which this knowledge can be used. And what does this mean? This means being able to create cross-functional and multi-generational response teams. Cross-functional response teams do not only comprise the different functions in the organization, but also the different governance bodies in the family business. And with different governance bodies, I mean the family council, the board of directors, other family constituents like family foundations or trust, if you have this as part of your family governance, but also the top management team and of course the CEO. At the same time, it's very important that multiple generations are involved in this process, because if past generation can somehow provide past knowledge from the past that can be utilized in this situation, on the other hand, the next generation or the young family members can provide new ideas and fresh ideas on how to recombine this knowledge from the past. Third step is very important to engage internal and external stakeholders, which means basically understanding how they need to be involved somehow in data gathering and response, but also how and to what extent the data produced should be shared across external and internal, with internal stakeholders and between them. And this is also related to the fact that it's very important that you develop a clear internal and external communication strategies. So what are you telling to your internal team? What are the narratives that you're building? What are you telling to your external partners? Moving to the next step, so once you have identified the responses and you have somehow an idea on how to use past knowledge and recombine this past knowledge, of course you need resources. And resources in this situation, finding the resources is pretty tricky. So it's very important that you consider what are the emergency resources that your crisis response team needs. And this means, first of all, considering your reserves, so what you have and can be utilized, and the amount of your reserves, but at the same time means prioritizing. So what are the projects that can be postponed? What are the projects that need to be prioritized in the current crisis environment? And most importantly, you really need to assess and document what you're able to achieve in this process. So are you really tracking? Ask yourself how you can track and assess the effectiveness of your crisis responses. It's very important that you create some clear KPIs that can give you an idea of whether you're reaching your objective, whether you're reaching your goals, and how you are basically documenting that what is working well and what is instead not working really well and need to be improved. And how these insights somehow are communicated and shared throughout the system, the entire system, so both your internal and external stakeholders. And the communication and internalization is key to make this a self-reinforcing cycle, because what you're doing now will be the knowledge upon which next generation will be the responses to similar crises. This was just an overview. I hope that you enjoyed the session, and I'm now back to you, Charmaine. I welcome questions from the audience. Thank you.
Thank you, Ambra. I'm sure there's a lot more to that, and I'm sure a lot of your personal experiences can come into account. I'm sure you know a lot more than you're actually telling. Anyhow, the number of questions that have come in, one of which is family-run businesses usually exhibit a high level of multi-generational family members in the hierarchy and have a very close relationship with the staff. Staff is like family, la familia, as they say, yeah? And would this be the single most important reason why they fare better in the crisis? Through thick and thin?
So I see this is one of the most important reasons. So I see too many important matters that are touched into this question. First of all, it's a very good question. So first of all, regarding the family generation, this is key, because having many generations involved, as I said, allow somehow family businesses to have access to privileged knowledge from the past, at the same time to also have new perspective from new family members on how this knowledge can be recombined to tackle future opportunities. So this is the first point. The second point is more related to the close connection with the employees, but also with stakeholders in general. And I think that this is very important, again, in terms of having different perspectives that are not only top-down, but are also bottom-up. So these generally, these stakeholders have long-term and long-lasting relationship with the family members, and so somehow have shared the same crisis situation over the time, and they can provide their own perspectives on how these crises were tackled in the past and ways in which the current crisis can be tackled or can be faced somehow using the lessons from the past. So absolutely, these elements, social capital and the involvement of next multiple generational members are really key to family business success in crisis situations.
Okay, here's another one. Prior generation worked in an environment of less technology and more stable environments with little competition. Now, this, of course, has changed radically. And where resilience and grit of the current generation is less, technology and competition is massive. So this person is asked for some advice.
That's absolutely true, but I wouldn't see technology as a substitute to past knowledge. So technology is an enabler. So you can think about how technology can somehow enrich and rearrange your past knowledge. Maybe the environment was much more static in the past, and now is much more dynamic. But you have means. So technology is just a means by which you can somehow readapt the lessons from the past to face the current, more dynamic environment. And this is also connects to my prior answer that we need also new perspective. So it's very important that all generation make new generation or the next generation family members involved into the decision-making process, especially into crisis situation.
Okay, and our final question. Do you think that family businesses also sometimes create rigidity and perhaps less of an inclination to invest in R&D as an average corporation would?
This is absolutely true. So basically, research says that family firms are more able or better able to innovate, but are less willing to do so. And this, I will say, lower willingness compared to their non-family counterparts manifest in lower R&D investments. However, it's really the necessity. Necessity is the mother of innovation. So necessity can help family firms especially to cope with these mental and psychological barriers regarding somehow the willingness to invest in innovation. So now you are in a need situation. If you don't invest now, you're not going to invest in a prosper or opportunity situation. So it's very important to now leverage this condition also to overcome the psychological barriers that are typical of family businesses.
Right, so that would be the last question on this topic, unleashing family firms' innovation potential. Thank you, Ambra. Thank you, Loredana. Thank you, Teik. And for the audience out there, ladies and gentlemen, we hope the insights and learnings shared by our faculty today will enable you to think through your current situation. If you are an organization at any one of the stages of evolution that Loredana spoke of, and you need to consider the business and management retooling that you may have to do. Or if you are in financial services and have not as yet made that leap to fintech to move your business to the next level. Or perhaps taking tips from Ambra just now on what makes family businesses so resilient despite going through cycles of economic and business ups and downs. And in all of this, if there is one thread that runs through all the topics just now, is that very poignant and very pertinent point on what it means to be a leader. Yes, a leader in these contexts discussed in a time of a new crisis. It has been my pleasure to act as your moderator today. Thank you once again, Malaysia, visiting friends from abroad, and those outside the country for joining us this afternoon. We hope to see you soon in the upcoming workshops, which Star will talk about shortly. I'm Charmaine Augustine from the Asia School of Business signing off. Thank you for joining us this afternoon, and have a pleasant evening. It's a lovely day outside. Thank you. Over to you, JC.
Thank you, Charmaine. Allow me to speak on behalf of Star Media Group's Events Business Unit. Thanks again to Professor Lordana, Professor Teik, and Professor Ambra for the great sessions. We hope everyone has enjoyed and benefited from the sessions. Thank you for your questions as well. Please accept our sincere apology for the minor technical glitch experienced at the beginning. Star Media Group and Asia School of Business run a number of business and management innovation workshops in the year. They are powered by subject matter experts from Asia School of Business faculty, who are also international faculty fellows at MIT Sloan. Today's session is an exclusive preview to our upcoming workshops. Please do join us to learn more about today's topic and to further engage with teaching leads on 24th June for Unleashing Fan Firms' Innovation Potential with Professor Ambra, 18 August for FinTech Innovations with Professor Teik, and 23rd September for Entrepreneurial Organization with Professor Lordana. A very good news to all our webinar registrants and participants. You are entitled to a special discount to join any of the workshops. You can enjoy even further discount if you sign up for more workshops. In the view of the current climate, please be rest assured that safe social distancing is our #1 priority. Hence, kindly be informed that the workshops may be converted to a virtual format. With the virtual format, we promise to provide online learning experience that is interactive, interesting, and effective for all participants. Do note that the date of the virtual workshops is subject to slight change. For more information about the workshops and special discount, please contact events@thestar.com. Thank you once again for joining us at this Star Media Group's online seminar in collaboration with Asia School of Business, live on Cisco WebEx. Before you continue with the rest of today, please help us in completing a short survey. You can do it via scanning the QR code that is on your screen, go to bit.ly/starxasb survey, or when you exit this webinar, there will be an auto pop-up of the questionnaire by the system. Your feedback means a lot to us in effort to continue to provide great experience for you and at our upcoming events. Please do connect with us and stay in touch with us through our various digital and social media platforms and channels. We look forward to welcome you again at our next event. Till then, thank you and have a great day.